the Teaching Tax Flow podcast, where the goal is to empower and educate you to legally and ethically minimize taxes paid over your lifetime.
Welcome, everybody, back to your favorite tax-related podcast, wherever you are listening to this. Welcome to the party. So, before we jump into today's topic, episode 68, our 2024 IRS updates from none other than one of our favorite returning guests here on the show, let's take a brief moment, as always, and thank our episode sponsor.
This podcast is brought to you by Legacy Lock. If you are new to estate planning or simply need to review your current plan, Legacy Lock makes it as easy as pie. Legacy Lock is a unique platform that enables you to easily complete your attorney-drafted documents conveniently from the comfort of your home or office. Your first step to this peace of mind is simply visiting teachingtaxflow.com/legacy.
Hey, everybody, and welcome back to the Teaching Tax Flow podcast. If you read the show notes, looked at the title, or depending on where you're listening to this at, looked at who the guest is on our show, very unique name in a good way. Probably looks familiar to you. Hopefully, if you haven't yet, go back, episode 38, believe it or not, IRS war stories we did with this gentleman, which is going all the way back to last July. So right after the holiday, Andrew Poulos is back on with us. But before we let this man give us the best updates, or I should say the updates to the IRS as far as for 2024, I guess we should say hello to my partner in crime, Chris Picuro. What's happening, buddy? How are we today?
Johnny T, it's always a pleasure to spend time with you.
You know, AI is a big thing now, right? As everybody knows. And, you know, we do all of our own production, all of our own editing of this show. I will honestly say that I did not duplicate Chris's voice and put it on when he says that. I think he may genuinely mean that you know what, he's full of crap. Let's skip on. Let's get out of the good stuff. Andrew, what's happening, man? Let's talk about these IRS updates.
What's going on, guys? Happy New Year to you.
Welcome back, and thank you so much for joining us. We appreciate it. I know we talk all the time. You're not only an amazing tax practitioner, but a good friend. And if you're my age, AI was Allen Iverson as a basketball player. But I guess there's a new AI in town now.
Man, something's got to be rewarded now, right? AI, the old AI is gone. The new AI is in. So, you know, it's transition to good changes in the future, I think.
Oh my gosh, listen to these guys. Listen to these guys going on. So let's look at this. So we've talked about on previous podcasts, right? We've talked about the IRS. I think at that time we were talking about war stories. We've talked about, you know, we've referred to them as Darth Vader, not in a completely mean way, but, you know, getting notice letters. There's a lot of things. And I think there might be a lot of confusion. I mean, I'm pretty sure people know what the IRS is and what they do. But as far as for getting into 2024, so obviously, some things have changed. I'm sure, I don't know the answer to it, but I'm sure there had been some things that maybe have been on the horizon that they were working towards, that maybe they tabled, maybe some stuff they got, you know, coming up this year. Just an overview, what might a taxpayer be looking at as far as for what in the world the IRS is up to as of today that we know about?
Yeah, I mean, I think we've got a lot of changes going on, right? As far as our profession and the IRS itself, changes that they're making. Look, they're undoubtedly, they got more in the budget, you know, more in the coffers that Congress has given them over the next 7 to 10 years. They're starting to beef up with their budgets, personnel, firepower, essentially, right? So as they beef up, you can expect more notices to be fired out. They'll be a bit more aggressive with trying to collect. Of course, Congress wants them to collect, money. I think we got probably hundreds of billions in tax gap, which is money that's not collected, that's sitting out there that taxpayers owe. So undoubtedly, from a psychological perspective, human nature, unless someone comes after you, if you owe, you're not going to probably voluntarily go out and pay, most likely, right? When they come knocking on the door, you got to figure out a solution to your problem. I mean, I think that's just goes to say that's just how people usually operate. A lot of people will be proactive, but a lot will just, kind of lay low, either because they don't have the money, they have other problems going on in life, and so they got multiple things to juggle, and they'll just leave the IRS as the last item on the list to be attended to. But when the notices start coming out at some point, then you've got to take action. So I think we're going to start seeing more people coming back into the pipeline, essentially, meaning that people who have either fallen off the bandwagon are in the system, but just owe for back taxes and others that are catching up. And with that entails we're going to start seeing the IRS, floodgates open up with a bunch of notices coming into 2024 and, of course, going out into 25 and future years.
You mean they're really living up to their name of the Internal Revenue Service? Their job is to keep the dollars flowing in one direction, although what we talk a lot about on teaching tax flow, right? And Chris says is very, very well is, actually, I'll let him say it. Chris, how would you describe the relationship with the IRS?
Right. Well, we say tax agencies are your involuntary business partners. So meaning tax laws are written to encourage and discourage certain behavior. A couple of things, Andrew. I think that the increased amount allocated to the IRS for enforcement, there's some negatives, right? I think we're going to have a lot more tax notices. I want to get your take on what you think the financial commitment is going to be towards, as John, in all seriousness, AI and software, because a lot of those tax notices are automatically generated based on what's on your tax record versus what has been reported on your tax return. I actually think that, especially as a practitioner, as you know, and for taxpayers, the IRS is almost impossible to get a hold of. We have a client in a private CPA practice. We set up a meeting for them, to go on the IRS website, helping them through a payment plan. And twice the chat popped up and said, "Hey, we're happy to help." And twice you put some information in and it says, "I'm sorry, we're not available. Ask us later." So in some ways, the funding could help resolve tax issues for taxpayers in some ways. So my question is, do you see there being a commitment towards technology with the IRS and personnel? And then are there any benefits to the IRS having more resources?
Yeah, listen, I think there's the good, the bad, and the ugly with everything, right? So with more, with bigger budgets, it comes higher enforcement. You've got more personnel, you've got software and AI that are coming into the equation. The world's constantly changing. So we as practitioners cannot help our clients properly until the IRS, steps up to the table and does their part, which is answer phone calls without us having to wait on hold for 2 hours just to figure out that, they answered and we get disconnected. I mean, that's just unacceptable things that have, been going on for years. They're still challenged coming off the pandemic. I mean, we've got, for example, notices that we're receiving for clients where they're, alleging the taxpayers owe, for example, payroll tax dollars that truly have been paid in. We'll send off a letter with complete support and documentation. And then 60 or 90 days later, we'll get a letter back saying, "Hey, if you want to correct your 941 tax return, file an amended, return." It's like, what? Did you guys not read the letter? We put it in black and white, all the tax deposits when they were paid. So you're going to have those challenges. It's gotten to the point where someone like me who deals with, tax resolution work, tax representation, at some point, for certain cases, I have to, enlist the help of taxpayer advocate, and so that becomes challenging because they're so backlogged. Literally, the last case I had to take a taxpayer advocate, which kind of was, sort of a life and death situation. And by that, I mean that it was a taxpayer that we had done an OIC for 5 years ago. And on the 5th year, which was last year, we filed their tax return timely on April 15th or 16th, whenever the deadline was. We got confirmation. The IRS says they never got it. They couldn't even find the file in the system. That's scary. And so they send out a threatening letter. They're proposing to terminate the client's OIC. It's like, wait a minute here. So I tried to make sense of it, called the IRS, finally got through. They're like, "Yeah, we never even see this coming in our system, never rejected, never nothing." I said, "What do you mean? You just, the file's just gone missing in action in thin air?" So long story short, I had to enlist a taxpayer advocate. Guys, it took almost 120 days from start to finish with taxpayer advocate. It took almost 8 weeks just for them to reach out to me. Okay. Taxpayer advocate, it took almost 8 weeks just for the taxpayer advocate to be assigned to the case, reach out to me. We finally got it resolved, right? Once they got involved, which probably would not have been resolved without taxpayer advocate. But it literally, since June, late June, I just resolved it, basically right before Christmas. I mean, this is unacceptable stuff going on. So I'm hoping that the positive with increased budgets is that, we'll get better assistance and better results. Of course, with that, you can expect more letters to go out. You can expect more taxpayers to have to become compliant and get into the system and do their part. So, yeah, do I see challenges? Absolutely. I think the challenges will continue. The new commissioner, I've heard him speak at the tax forums last year. He had said that they still had several million amended returns to go through and process. I mean, so they're still challenged. I don't know how this tax season is going to go, but overall, yeah, I mean, we're at a point where it's frustrating as a professional because we're trying to help our clients and we can't do our job, and then our clients are thinking that we're just not helping them, right? So it's just a stressful situation at times.
And when you mention OIC, I'm going to assume that that's an offer in compromise, correct? Done on a client's behalf?
Yes, OIC offered.
And
yeah, sorry about that. Yeah, correct. An offered compromise.
Yeah, I think that that's the challenging part is we say in our private practice all the time, hey, we need chocolate chips to make chocolate chip cookies. In other words, if a client's asking about, can we do this? Can we do that? Yeah, we can, but we need the ingredients. It's hard to help a client and represent a client, where you are a national expert, in when you can't get access to the taxing authority that you're representing your client for. I think that, if there was, it's nice now that we could do many of the amended returns, electronically file the amended returns, which is a huge advantage. It's very frustrating.
Not to interrupt you, but even that, right? If you look at it, we can only go back 2 years to file amended returns. So why not, make it 3, 4, 5 years? Make it, it's much easier for the government and for us as professionals to e-file. Everything is processed. You leave out the human error factor of it. It's just, so why not go back? I mean, why only 2 years? It's stuff like that becomes frustrating, or just 2 years to file a back return, unfiled return, right? It's your current year and 2 previous years. Why not make it 3 or 4 or 5 years? We will alleviate so much of this, paper and backlog. I mean, that's the whole point of moving into technology age, is to get rid of, paper and the human error and the processing times. I mean, have you seen the scanners that the IRS uses to scan these paper returns? They get mailed into them, man. It's ridiculous.
Yeah, I think I think that they're 10 years behind, at a minimum. So they're like,
yeah.
They're like part of Europe, listening to pop music, right? They're not Swifties like John. They're listening to old Taylor Swift, not the new stuff.
Oh my gosh!
We had to come in.
There
it
is. There it is.
John, they haven't
my
even
gosh!
started playing pickleball yet, right? They don't even know it exists. In years ago.
Nope. And when it does, I'm sure you'll be over there teaching lessons. So speaking of dates, so if I heard you right there, so the limitations on doing an amended return, if anybody's wondering what that is, obviously a ton of information out there. That's 2 years, correct? Is that still 2 years to be able to file an amended return?
No, but to file electronically is what I was referencing to, being filed versus basically having to paper file, send it in, certified mail, and wait 6 or 9 months or a year for it to get processed, right? I was referring to just the electronic portion of us being able to file, not that there's a 2-year statute.
Gotcha. So that basically follows similar, because what is it? The general statute of limitations for the IRS is 3 years still, correct, as far as for assessing any taxes. So dumb question with that. So and I can't remember where we had this conversation with somebody. It might have been with a friend of ours in the past couple of weeks. I believe their situation was kind of unique. They had filed a couple years, did it for a couple years, filed again, then didn't again for a couple years. So taking that unique scenario, again, I don't know all the details of it, but when there's that statute of limitations of 3 years, is that basically saying like, hey, you know what? If you didn't file taxes 12 years ago and then you did and you haven't gotten a notice, they're not going to, is there okay, you're safe, they forgot about you in there? Or is that kind of in reference of, you mentioned earlier on about them staffing up, they're finally going to be catching up on themselves? Can they go back, beyond that statute of that 3 years and really start to get their act together?
Yes and no, right? Yes, typically what we have seen in the past, the past doesn't predict the future, but in the past, if we have a taxpayer who's just not filed forever, 10, 12 years, 15, whatever the case is, usually, if it gets assigned to, for example, if you file 1 year, the most recent year, and you have a balance due and you can't pay, then it'll go to collections and you'll be doing potentially with a revenue officer. Revenue officer obviously is going to have to do their due diligence and go back and figure out, well, hey, we got a taxpayer here who he just filed, got in the system, hasn't filed the last 10 years. It's depending upon the revenue officer and the government, really. Usually what we see is they'll go back 6 years, unless they have a reason to go back further. If it's a wage earner, meaning someone who's W-2 employee, usually they'll go back 6 years and then just leave it at that. If it's someone who's self-employed and just been making a ton of money and just has never filed, then the government sees dollars, potential for to collect dollars, of course, and penalties and interest. Then they could force you to go back, 10 years, 12 years, whatever they want. But typically they'll limit it to 6 years for the most part, right? And so you got to take that with a grain of salt because every case is different. And like I tell clients when I take on tax resolution work, my past experience and my past cases don't predict, the results that I can provide potentially for your case, right? It's all individual case by case work that we deal with when it comes to dealing anything outside of the scope of just preparation.
Well, and what we want to talk about also is, in your opinion, no, we don't have a crystal ball. We have a good friend of the show and crystal ball, but so she would appreciate our shout out. But we don't have a crystal ball. But what are the enforcement areas that you see? Obviously, reading the tea leaves in our current landscape, the employee retention credit claim. I see some enforcement coming down on vehicle credits that may not have been properly taken. So where will we've got employment versus independent contractor. Yeah, what are you thinking?
I think, Chris, the hot stuff that we're seeing, I'm seeing probably, as you're seeing, many others are in the profession on our side as professionals. We can expect enforcement on EVs, electric vehicle credits, and partly because there was just been a lot of confusion, right? With which cars qualify for which years. Tesla was, okay, it qualifies, and 2 years later it doesn't. Now it does again. Oh, no, we don't want it this year. We'll have it, we'll put it back on a calendar next year. So there's been a lot of confusion and issues with that. And I believe from what I'm seeing that they're actually doing a project on that. A project means that they're systematically just going and they're doing auditing a certain number of returns of any tax return that qualifies with this element of it, meaning with an EV credit, right? So you could be just an unlucky one getting audited really just because it's a project and your tax return has, a certain element that they're auditing. So that's one thing. And the ERC, employee retention credits, man, that's hot right now. It's been super hot. Just so much fraud. We got all these mills that popped up during COVID. Like, hey, we're the experts here. Forget about us tax professionals, right? All of a sudden, we have someone who's never done a tax return in their life, and they're the tax professional. They're the experts in ERC. They're telling folks you qualify. You qualify because it was a government shutdown. No, the IRS has specifically said just a government shutdown is not going to qualify. You better have a better, reason to support your ERC claim. So that's going to be a nightmare for both the IRS moving forward and for taxpayers, small businesses who have claimed ERC. Worker classification, right? I always reference it as worker classification. I've authored a lot of articles and presented on this topic. So for me, it's just, for some, it's a dry, boring topic. For me, I find it interesting. But worker classification, meaning employee versus independent contractor. Right? The good old handshake that we always hear. Well, me and the guy, Andrew, we just decided that, he's going to be independent contractor. He'll take care of his own taxes. No, it doesn't quite work like that, right? There's rules, there's laws we have to abide by, 20 common factor laws. And a lot of that stuff, what folks and even a lot of practitioners don't know is that most, not all, but most of your classification issues with worker classification don't start at the federal level. They start at the local level, at the state level, right, with the Labor Department. That's where they begin. The feds in most states, not all, but the majority of states have a contract in place where they share results in exchange for tax dollars. And so therefore, basically, your biggest, threat in getting caught, if you're doing it wrong, is at the state level. And if it's a big enough case, then you probably can expect, the feds to come in afterwards, right, and audit you. The IRS could step in. One thing people have to understand, and the IRS has specifically said, that with the Federal Labor Department and Labor Departments, that they're going to increase enforcement. It's a low-hanging fruit, similar like reasonable comp for S corps that we're all worried about. I mean, this is probably just as much, if not more, of a low-hanging fruit for the government. You turn around. I mean, I think, Chris, would be hard-pressed to say that from small business returns that we do, that probably the majority of them don't have some form of contract labor. Even if they have W-2 employees, they still have some form of contract labor. Whether they're classified correctly or not is, not the point today. But what I'm saying is every return just about has some form of contract labor on it. So there's some exposure for the majority of these returns that we prepare in the majority of these small business owners. And so if you get it wrong, there's no 3-year statute here. Oh, like the government can only go back 3 years. It's like, oh no, they can go back, they can go back way back in the days if they want. Well, that's incumbent upon the government and how much money is on the table. So, I think those who are doing it wrong need to tighten up, because that's going to be some huge exposure moving forward, with audits. And when it starts getting out there, then people are going to get scared and they're going to start talking. The old traditional thing, oh, my buddy got busted, got audited, my neighbor, whatever, right? So I think that's something that we have to, as professionals, have to address with our clients.
Well, I would agree. There are some, we know the 1099, that, not to bring up Taylor again, but what I call the Taylor Swift concert rule, the 1099K law got kicked. I think the 1099 thresholds are rather punitive, personally, but they're there, and the penalties for not issuing these and the backup withholding fall on the hands of the person paying the money. And I agree with Andrew that worker classification is going to continue to be a big issue, because, quite frankly, if you have 10 subcontractors you fail to give a 1099 to, the government doesn't want to chase those 10 people around. And if you own a business, you might have more resources to collect from.
Well, not only that, right? You get into elements of trust fund penalties and trust fund, right? The government, is just a whole lot easier for the government to attach the business owner and chase after, the business owner who may have assets. They can go after him or her personally, than it is to chase 10, 20 other people who they know they're going to have a hard time, right? If these contractors, independent contractors, these subs haven't filed, chances are, the government knows, statistically speaking, that they're going to have a hard time collecting from them, and it's not worth, the efforts potentially for them to go make them file and then chase them for tax dollars. Whereas on the employer side, on the business side, they can pursue it, get it potentially under willful negligence, to where they go back as many years as they want, and then they get, the trust fund portion, the employer portion of the taxes, right? So it's a very interesting law that can become very dangerous, and it's oftentimes, when people get in trouble, it can easily put you out of business if you're not careful.
Absolutely. Excuse me. So it sounds like a lot of the things that we're seeing in 2024 it is a lot of carryover from previous years. And now this year we're kind of seeing where things are flowing. Obviously there's new things, like we mentioned, the ERC. I mean, that's an awful story, I think, for how good marketers are sometimes, right? Like you mentioned, these guys are all of a sudden running commercials, have no idea what they're doing. They hired a spokesperson and they're the expert. Pretty unfortunate. We did a great podcast on that. I do want to touch on one quick thing before we wrap up too. I mean, obviously, Andrew, we're excited. We've been working with you. You and Chris have known each other for a long time. We're going to be launching some products, for lack of better terms, where people can go directly through our website and actually have access to some of the things that are out there that, IRS representation, et cetera, that they may have not had in the previous years. But I say that only as a preface to, we've had multiple conversations about the IRS specifically, people's perception of them, and really how it's awful, right? Like you touched on, again, multiple conversations, multiple podcasts we've done here, as well as on our other show, the Mr. R Show, which is more specific towards tax pros, is that it really boils down to the relationship you have with these IRS agents, right? So you had mentioned on the one conversation I'm thinking of specifically, you have such great rapport with them that sometimes you can keep the situation from just spiraling into the taxpayer is going to lose at the end of the day anyways. There's always some compromise in there, just having mutual respect across the board. It's like going into, the best analogy I can make of that, right, is it's like, I don't know if like MMA but like boxing. You think of like old time boxing, they go into this like guns a-blazing, but then at the end of it, one guy may be bleeding from the face, but they respect each other. They handshake it out. They go their separate ways, and that's it, right? Like that's what comes to me visually when you talk about just having and maintaining a good professional relationship with the IRS.
Yeah, you're absolutely right. And so, John, when you deal with tax resolution, tax representation, whatever you want to refer to it as, and you do it, frequently, as part of your practice, in your area, your demographic, area, you're going to deal most times with the same, professionals on the other side, and I call them professionals. Some don't act as professionals, and others are very easy and accommodating to work with. But revenue officers and revenue agents, right? If you deal with in the scope of work, you're going to deal with, over and over most of the same people. They get to know you, you get to know them. You know their quirks, they know your quirks, right? So sometimes you push their buttons, they push your buttons, but at the end of the day, the objective is to get resolution for the client's case, for the taxpayer's case. I've had cases where I've dealt with the same revenue agents on multiple audits, revenue officers here in Atlanta, for example. I mean, there's the Staffing office, for example, right? And Powers Ferry office, those are two main offices. A lot of those guys in there know me. It's like, someone one day was like, hey, I got a case going on, and the other revenue officers like, with who? They're like, Andrew Poulos. Yeah, you'll have a good time working with him. Just don't push his buttons because, basically, he'll take action, right? So, I as a professional represent the taxpayer, and I don't let, my clients get run over, and get thrown under the bus. And so you've got to know the laws, you've got to basically be professional, and you've got to get a resolution. But there's times when you can't come to an agreement. So there's options out there for taxpayers that you've got to know. And that sometimes is filing a CDP, kicking it out of the revenue officer's hands. Or if you got an exam, an audit, and you can't come to terms with the revenue agent, you work it enough, then the strategy might be you going into it. And I think Chris and I have dealt with this before. Going into it, we know that we got to mitigate risk for the taxpayer. So we create a strategy that we work it enough, but basically the end result we know going into it is we want to go to appeals because we're going to get a better shake, but for the taxpayer than if we deal with the revenue agent, whether we know the revenue agent or we don't, right? So this strategy to everything, as I've said before in previous, shows that we've done, it's always about strategy. It's what strategy do you develop as a professional to get the best possible results for your client? Sometimes, sometimes it's filing a CDP because you're not going to be able to get anywhere with the revenue officer, whether they're difficult to work with or not, or for whatever case, you're trying to buy some time, to go to appeals for a collection case because you can get a better deal there, for example, right? Based on your previous experience. So there's so much strategy involved. It's Chris and I were having a beer, a couple of years ago, you were in Atlanta. You had come in town so we can film a show for Financial Smarts that I was working on, and we were out having beers. Like, man, I got a case. What do you think? I'm like, oh, this is stuff I love, right? So we're having a drink, eating some wings, at the bar, and I'm like, dude, what are you gonna do? He's like, guys, like this is involves XYZ, and I'm like, oh, this should be your strategy. He's like, things gonna work. I'm like, 100%. I think what you got the you mitigated the risk that you were trying to mitigate on the client, right? So it's partly fun for us, right? Those of us who do it. And partly getting the results, and there's no better satisfaction as a professional beyond the money that we're out to make, of course, as a living, but to get the results pretty much and see a client who's satisfied now, right? And that you help someone who otherwise would probably get thrown under the bus by the government if they were representing themselves, or if they went somewhere that taxpayer professional wasn't skilled enough to be able to help them.
Right, and that's, to wrap it up, one thing, collection due process, I believe, is a CDP. I could be wrong. And the other thing is, one of the positives of maybe the IRS having more resources, and I give them a little bit of empathy here, is having more training for the stormtroopers out there, for the auditors, people on the front lines, because a lot of times those folks are inexperienced. And they are let's say it bluntly, they're rigid. And to prevent that, if you could resolve the examination or the tax notice with your first point of contact, that would save everyone a lot of time. But unfortunately, that's just not how they're structured right now. And
no, it's tough, right? Like you said, a lot of them are new. We started as new in our profession at some point, right? Almost 30 years ago. I mean, we just, we all start from somewhere. But like I've been fortunate that I got invited a couple of years ago, and I may be getting invited again from what I heard, over to the Atlanta office where they did a roundtable for new revenue officers, all the new trainees, and they brought in a panel of tax professionals from the Metro Atlanta area. I think there was 4 of us, so we can meet them, they can meet us, and basically what they want us to do is explain to these revenue officers our challenges from our side so they can understand our side. Most of them have never worked on our side, right? So they don't understand. And we don't want them coming knocking on the door, unannounced and being, I don't want to put this out wrong, but effectively having them being bullies, right? Because you're not supposed to be that. You're supposed to be a professional. You're supposed to follow the law. You're supposed to do your job. Most of them do, but there's an exception to the rule with everything in life, right? And even on our side, pretty much. You got great tax professionals, and then you got some who just, aren't so great, don't follow the law. Same thing on their side. So I enjoyed it because I got to meet a lot of these, folks that I would be working with potentially in the future, and just, you put a face and a name together, right? So, once they know you, sometimes it's just a whole lot easier. They ease up a little bit from being so hardcore and intimidating in a sense, right? Because there's laws. There's, you got, notice of intent to levy. Well, you got a collection due process rights, and so, and who's going to work with you and who's not. You got a revenue officer that you've had, bad relationship with in the past. Well, that there's just no sense in working with them because you're not going to accomplish anything for your taxpayer. So there's, it's all about relationships, and the more you deal in this field, and the scope of work in this relationship base, you get to know them, you get to know who you're going to work with, who you're not, how you're going to represent your taxpayer and move it along. But, it's just, we can expect more of that stuff. And, tax pros have to be, well-versed with these letters, the LT11, the L58, 1058, the CP2000 notices. You got to know what time limits there are, what options you have, because a lot of times there is a strategy is, okay, well, we don't, we want to file a collection due process hearing. Why? Because we know that we're going to get a better shake with appeals, and we're going to basically buy 2 years before it comes up, or a year, or 9 months, or whatnot, right? I've had successful resolutions where the statute ran out on the government on cases that were towards the end because we filed a collection due process hearing, but we filed it late. So there's elements of that, and people would, hear and said, you filed it late, wow, you're running the risk. Well, you discuss the risks with the taxpayer, and ultimately the taxpayer makes a decision. But, we've had during the pandemic, just not run over in a tangent, I had a taxpayer who owed some money. 2 years. Each year had different statutes, but it was towards the end. I think there was like 7 years left on one, maybe 8 years on the other. And I said, listen, let's file it for a collection due process. We weren't going to get the IRS on the phone anyway at that point. And so I said, I think this should be a strategy. We filed it late by 1 day. She goes, what does that tell me, Andrew? I said, it's a CDP, collection due process. We file it late, effectively, and it doesn't toll the statute. Right. And so, but they could also levy on you. She goes, where's the chances? I said, the only thing the lady was retired, had Social Security. I said, probably unlikely. Not that it's not possible, but unlikely. I said, but it doesn't toll the statute, which means while we're waiting for this case to get docketed in and gets assigned to an appeals officer for this collection case, that essentially the statute's continuing to run on the government. If I had filed it timely, the statute would toll. So if it took the government 3 years to bring this up, basically they just bought another 3 years. And you know what? It actually it finally got to an appeals officer for a CDP. We had 3 months left on the one statute and about a year left on the other. And I'm on the phone with the case. I remember, and the appeals officer says, Mr. Poulos, we're talking through it and everything. She goes, Mr. Poulos, she goes, I see that the statute's been running. She goes, this has been a late file CDP. She goes, did you intentionally do this? And I'm like, oof, I'm like, what do I tell this lady, right? There was silence, and then she kind of knew I wasn't going to answer. She goes, I tell you what, she goes, you did an amazing job. She goes, for your client. She goes, and if I was on your side, she goes, I would have done the same thing, right? And she helped me. I said, listen, we want a CNC, currently non-collectible. I said, the taxpayer doesn't have the ability to pay. She's retired. This is old debt for whom she was married on a joint return. And she gave us what we wanted. She said, there's no point really. She goes, in not doing a CNC. She goes, you got 3 months left on one year for the statute. And she goes, and 9 or 10 months or a year left on the other one. She goes, this will just run out and expire. She goes, you did an amazing job. She goes, the case is concluded, right? So I got the taxpayer what they wanted, but it was all, I'm going back to what was it? The strategy, right? You got to discuss the options and the risks with the client, let them make the decision, and basically, execute the strategy when you can.
Awesome. Well, Andrew, thank you again for joining us, man. I think looking at, I can't believe that it's 2024 already. Like it's wild, but
dude, time flies, man. Let me look. Yeah, I got more gray hair than I had last year. I mean, Chris keeps it minimal, so you can't tell his age. I mean, he looks 30 still. So.
Oh, geez, this was recorded after happy hour, obviously. No, but thank you. And it's interesting because these war stories that we are important. because what we're seeing is there is going to be more IRS enforcement. A opportunity to strategize is going to be more important, and be aware of it and make sure that you have the proper representation is absolutely, and start preventing the problem before it's a problem. Make sure that you are reporting on your income and sharing as much information as you can with your tax professional.
Yeah, absolutely. I agree, Chris. It's basically being proactive versus reactive is key in this business and for taxpayers.
Sure. And two things just to wrap us out and close out the show here. Andrew, you mentioned there, strategy, as we always talk about strategy, and I've experienced it with you, and I've seen and I've heard fantastic things about just the relationship that you and Chris have had and client relationships. I think it goes without saying, right? Strategy and experience go hand in hand. So that's awesome to hear. Awesome to see that that's actually the case in this. But then also for our listeners as well too, just to recap and reiterate that was a fantastic, excellent example that you gave there about the IRS bringing in for new revenue officers tax pros so they can meet them. I think, and me as a taxpayer, I'm not a tax pro like you gentlemen, it's almost like an added sense of comfort that the federal government is doing, that they're trying to do something and at least bringing people together in that sense, instead of saying, hey, we're going to hire a bunch of revenue officers and, here's your equipment, go to battle. It's not necessarily the case. So that's excellent to hear.
No, I think I know I enjoyed it and I was glad that they did that. And they're talking about possibly doing it again now from what I'm hearing, because we need to understand their side and they need to understand our side, right? It's a two-way street, man, here. It's not, the government can't just do what they want to run over people, and taxpayers feel like they're doing that. And when you get to that point, that's when we have problems in the world and in society, right? Taxpayers don't want to be compliant. They're like, well, heck, they're dropping bombs pretty much overseas using my money for that or whatever. The taxpayer feels disgruntled, so they don't want to be compliant because they're like, well, what's the point? I'm just paying taxes. I'm not getting any benefit out of it. These revenue officers, revenue agents, they're just out to throw me under the bus. So it just makes a whole lot more sense long term if there's sort of a relationship there, whether it's part of their training. That's up to the government to decide. But I think there needs to be some relationship between their side and our side in order for us to be able to function and work together with the work that we do as professionals.
Excellent. Well, thank you both, gentlemen, for joining us on this. I know this is one of our longer shows, but we anticipated that. Lots of good information. Again, anybody who's listening to this, Andrew has been a fantastic resource for us on multiple levels, as well as yourselves in the audience. This may be about as close as you could possibly get to having an insight into the IRS. We already know you can't just call them up and have a conversation with them. So go back, share this with your friends. Hopefully you got a little bit of comedy throughout the process here to lighten up the subject. But as I always like to close these shows out, as you know, if you are an avid listener and subscriber, if you're not, then this is new to you. Shame on you. You haven't been here before. Subscribe so you get the next shows. We will see you back here, same time, same place next week here on the Teaching Tax Flow podcast. John here from the Teaching Tax Flow team. Thank you, Andrew, for hanging out with us here on this episode, looking at the IRS, what's happening in their world, efforts they're making to really kind of not break the mold, but I will say bridge the gap between the federal government, the IRS, and the taxpayer. So we went into some great topics. Obviously, we talked about a lot there, and I look forward to doing these again. Obviously, something that we touched on there, the IRS is making a very conscious effort, it appears, to kind of ease that transition or ease the gap, bridge the gap, less muddy the waters, I guess we could say, and build the relationship between those that work for the IRS and the taxpayers, which, just saying, me as a taxpayer, I appreciate that greatly. So excited to hear that. And honestly, we look forward to having Andrew back and touching on this really as the year progresses and obviously in years to come. I think it's a great topic to look at and probably the closest we can get in a lot of cases to really having a deeper insight into how the IRS is handling things, right? We talked about technology, budgeting, etc. So I appreciate everybody's time for joining us on this episode. Andrew and Chris, thank you as always, as I mentioned, and we look forward to doing it again. So see everybody back here next week. New topic. Let's do it.
The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Cabin Advisors, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine the risk factors and other information contained in the memorandum.